Stock markets can rise dramatically in the near future. They can beat previous highs, exceed expectations, and enter into a state of perpetual bull market. This isn't a far-fetched dream. In fact, it's the policy of all central banks around the world. Continuously inject new monetary stimulus, money printing, in the banking system, intentionally causing inflation in an attempt to stop real deflation from occurring. The unfortunate part is that once the tap is open, it cannot be turned off. You came here for the truth, so let me unveil that for you. Today we're going to get into the issue I brought up in the previous video, and that is Japan going into negative interest rates. They've done so, and it causes the stock market to rise. What a surprise. That's right. When you are willing to destroy your currency, the stock market will rise. Really not making any sense here, but that's just the way it is. Print money, ruin the currency, and send the stock markets up. But really, it is directly correlated, because if you're willing to weaken a currency, then the dollars, or the currency it's measured in, is basically worth less. So, by relation, the stock market rises nominally. Let's go to the major article for today out of Reuters. Global equities jumped and the yen slumped against the dollar after the Bank of Japan stunned markets by introducing negative interest rates, while hopes the U.S. Federal Reserve will slow the pace of future rate hikes. So what they're talking about here is essentially, look, Federal Reserve, please don't increase the interest rates anymore. The market can't handle it. Do what Japan did and actually make things worse over the long term. And of course, they're all in this together. The BOJ unexpectedly cut a benchmark rate below zero in another bold move to stimulate the Japanese economy, which is dead and has been dead for decades. They also talked about the specifics. They're going to charge 0.1% for the excess reserves, may cut rates further if necessary. So this is no different than what many others have done. They're going into the negative interest rates territory. Japan is definitely not the first, definitely not the last either. They get into more specifics, which I won't cover, but just at the bottom of the article is a quote. The BOJ decision was a massive surprise. It's further money printing from Japan on a massive scale after having told the markets they're not doing it. That triggered European investors to push the risk on button. Now, this right here is something that we have seen going on. They like to tell you, no, everything's fine, don't worry. And then, of course, nothing is fine because they end up needing to go to these extreme levels. Never believe what they're telling you at face value, of course. It's all propaganda. This article is out of MarketWatch. The economy bogged down at the end of 2015, raising questions about whether U.S. growth is losing momentum. That's right, the GDP, the fakest number we have. The gross domestic product, the value of everything a nation produces, expanded at an annual 0.7%. And that's basically annualized from October to December. That's a big markdown from the 2% growth in the fall and 3% last spring. Neither of those are actually real either, but now they're going into a very dangerous territory, even for their own garbage numbers. When the government is willing to admit that there is a recession, when that there is negative growth, that really signals how bad it really is. So we're almost at that borderline right now. Softer consumer spending, falling exports, and smaller buildup in business inventories were largely the cause of the fourth quarter slowdown. And of course, they'll always blame the weather too. If it's warmer, if it's colder, and somehow they always find a way to use weather as the major contributing factor for several percent of a GDP of a major economy. Doesn't make any sense to me at all. They really didn't used to do this a few years ago even, and now they're using that to blame all the time. This is the graphical depiction of the GDP growth. One of the things that I would like to note is the net exports declining here, and this is something that we will see continuously as the dollar becomes more valuable in relation to other currencies. Obviously, one country may choose to import from a different place should it feel that the exchange rate is too much, so the net exports may suffer. But I would ultimately have to believe that government spending, and that is both on the books and off the balance sheets as well, will increase for the foreseeable future. This is from my book as we're talking about inflation, hyperinflation, currency devaluation. Inflation hurts the saver due to the depreciation of the value of the paper dollars we are forced to use. It is necessary to own assets that will appreciate in value, at the very least in nominal terms. So other than for emergency situations, I'm not a big fan of cash, and that isn't in really any currency at all. Yes, you should have some. I completely agree with that. But the savings, people keep their cash in the banking system. That I completely advise against. So even if you were to buy a stock, it might, in some cases, maybe a better idea, maybe not at this time, but just in general, to have it in a stock versus having it in the bank, because the bank is a guaranteed loss. The stock may at least increase nominally, but of course there are better assets. But I'm just talking in generalities here. For example, the house you own might be worth more than it was 10 years ago, but you pay more in taxes, food, and energy. It's more expensive, so you're really just breaking even. And people don't realize that. In Canada, Toronto specifically, I don't know if you out there want to speak to this, but you hear people all the time, well, my house is increasing in value. I'm doing great. I am doing so great right now. My house, when I bought it 30 years ago, was $300,000, and now it is $600,000. I've doubled my money. But of course, they don't know what they're talking about because they need to live in that house, so they're not making any money. You only make money when you sell. That's the only time you make money. And of course, what are you going to do with that money? Are you going to use it productively? Perhaps you want to buy a cottage up north and you want to get away from it all. You're retiring and what have you, you're downsizing. Okay, sure. That is something that you can do. If you use it to buy another asset, totally understand. But what I wanted to get to was just the fact that things even out. Yes, your house is worth more, but that's because the dollars are worth less than they were when you bought them. That's all. That's all I wanted to point out. But dollars will depreciate in value, and we know that because of things like this. Swiss government proposes paying everyone £1,700 a month, whether they work or not, in a bid to end poverty, but insists that most people will still want to get a job. Switzerland, definitely one of the better economies in the world. Introducing this, they're not the only one I've seen suggesting something like this. Of course, it's not been instituted at all. They're thinking about it. And they're going to vote on this, a guaranteed basic monthly income. I think that this is very dangerous because of the way that this works. See, they are going to get money to pay everyone, but where do they get that money? Well, they take it from the taxpayers. So you're paying yourself. So it's a slippery slope, and of course, the more money that the government takes from you, ultimately the less money you get back. And Switzerland, although definitely great by comparison to a lot of others, is really slipping here and not really liking this. They were willing to print money and peg it to the euro, and big mistakes that they've been making here. But certainly their economy is doing a lot better than others in the area. They all have to follow suit. That's the problem with this globalized system. Drug shortages forcing hard decisions on rationing treatments. This is about health and just don't want to really cover it. All I wanted to say is that with things like Obamacare, with individuals who live in Canada and the UK, they know what this, let's call it socialist healthcare is. And a lot of times, you do get good care, but you have to wait. You have to, experience rationing of that care. And, perhaps you haven't had to deal with this, but let's just say I've heard of it very much intimately. And this is really sad, the way this works, that you pay so much, and it's called free healthcare, but of course you're paying for it. You pay so much, and ultimately it doesn't come back the right way. Very, very hard to really deal with this. This is just something I wanted to note. talking about Mexico, but they're just one of many countries. Talking about a particular case, this is Mexico's growing number of forced disappearances, a term used for abductions committed by authorities. So many people here, in this case here, the disappearance of 43 students in September 2014 when the municipal police attacked the young men and delivered them to a drug cartel, which allegedly killed them. There is extreme levels of corruption going on right here. Why? Because the governments themselves are out of control. At this time, they're basically going for broke. And this goes for the central banks. This goes for all the politicians. They're just going and grabbing and tearing up everything they can. Take it all, take the money and run. That's all I wanted to get to for this. If you found this informative, please give me a thumbs up. Last but not least, if you found the video informative, you'll definitely find my book, The Money GPS, even more informative. You can actually flip through the book. If you go over to Amazon, they have a look inside feature, which will allow you to flip through the pages of the book to see if you like it. Take care.